Palantir, one of the most dreaded companies out there. People either love it because the stock market's going up, or you hate it because of the way they use information. Palantir has ingratiated itself throughout the US government, in the Department of War, in other departments, as well as the IRS. The IRS has been using Palantir now for almost 10 years. And Palantir is a tool, a company that allows it to take data from different sources, normalize it, and then be able to make comparisons and do discovery of information. And this has only gotten stronger. Now, Palantir has a product called Foundry, which allows it to pull data off the blockchain. It also has AI enablement of that. And other departments in the government, as well as the IRS, are using Palantir to discover people who are underpaying their taxes or not reporting and paying what they should. With this new ability to monitor the blockchain, Palantir is well poised to take people who are not reporting all their cryptocurrency and start to weave through the network of addresses on the blockchain that you use to hide, store, and secure your cryptocurrencies and start to detect where there's unreported income. I don't think the IRS is going to engage the Palantir analysis unless they suspect someone of not reporting everything. So what can you do as an average taxpayer? Make sure this year is the first year you report everything and report it right on the tax return, account for all the income the IRS knows about, and protect yourself with TaxShield, a product that we offer that will monitor the IRS, give you a heads up when the IRS is trying to monitor and audit your tax return. So that's the future of Palantir. 2026 marks the implementation in Europe of the DAC8 regulations, DAC, then the number 8, DAC8. This is Europe's implementation of the OECD's CARF regulations. CARF stands for Crypto Asset Reporting Framework. The US was involved with the OECD to develop this framework, and it is this framework which became the defining element of the 1099 DA. It's the same information that's being exchanged. However, the US has not signed up for CARF yet. Europe already has. And for those people who trade on European exchanges, you'll be subject to CARF. And actually, the White House is considering, we'll probably hear about it in the next month or two, if the US itself will participate in CARF. What does CARF do? CARF involves the sharing between countries of your transactional information on exchanges. So let's explain how this works. Once the US becomes a member of CARF, if you are an American, you're trading on a European exchange, then that European exchange is obliged under CARF to get KYC information and to know where your tax home is and your tax ID number. They will then, at the end of the year, report that to their local tax authority. So if the exchange is operating out of Malta, they're going to tell the Maltese tax authorities, here is tax information about this American. And then Malta will then send that information to the United States IRS with the tax information and all the trading activity. Think of it this way, it's like a foreign 1099 DA coming into the IRS. Now, the US hasn't signed on to this just yet, but the Treasury Department has recommended it. It's in the White House going through evaluation. We expect to see this signed very soon. What does this mean? This means that your trading in a foreign country is going to be reported to the IRS, but you may not get a copy of that information unless the exchange shares it with you. The noose is tightening around the crypto traders, harder to hide. Here's an interesting wrinkle to this, the DAC8 regulations, is that any foreign exchange, foreign to Europe, that is doing business with European persons is also expected to comply with the DAC8 reporting requirements. And if they fail to do so, they could be subject to significant fines and penalties and painful regulation. So, give an example, Binance International, who is very elusive about where they exist as a tax authority. But if you're a European person and you're dealing with Binance, Binance will have to report back to your European authorities what your trading activity was. Once America signs up on CARF, Binance will start reporting this information to the IRS on any US identified person. It's harder and harder to hide. The IRS is not receiving complete information, but they're getting significant information about your sales and transactions, and they're expecting you to report all that on your tax return. It's not like it's been in years in the past. It's tougher and tougher to hide. Some people said they're just going to do everything DeFi. Well, eventually you got to cash out. Eventually you're going to have to produce money and you have to produce evidence of what your cost basis was. it's really difficult to hide. This is why CARF is a very significant thing in terms of global tourniquet that's going to happen. So this is the year that you should focus on doing your crypto tax reporting completely accurately so that you will not get audited by the IRS for this and prior years. At Crypto Tax Audit, we have a methodology we call the Bulletproof tax return, where we make sure for crypto investors that all their income is reported in such a way that it satisfies the IRS's analytical expectations to keep you from getting audited. And the proof is in the pudding. We've done over 5,000 crypto tax returns, and none of them have been audited on their crypto income. So we believe that our bulletproof crypto methodology really keeps the IRS off your back. So if you're interested, please call us at cryptotaxaudit.com to schedule a consultation, confidential, and you'll learn how we could do defendable gain calculations and a bulletproof tax return to protect you and your assets from the IRS.